If you look at where they until about, I'm going to say about maybe a month or so ago, they were I'm going to say a multi-year high, just below a multi-year high in terms of short position, net short position. And that started to come off, and that actually pretty much coincided with the peak in silver right around $32, which was sort of late October. So that started to come off, which says to me that they no longer feel that, or at least they have less conviction that silver is ready to, or that there are higher odds that silver will pull back, or that it's as fully valued, I guess, at this point. So it's nice to see the commercial hedgers pull back on their outstanding, on their net position, short position in silver. It's not at its most bullish. Usually you get that after a considerable correction in the price. But it's certainly, like I say, you don't have to have that set up exactly where silver has pulled back and they reverse from a zero position in net short to move towards a higher position in net short. All that to say that commercial hedgers, the direction of their position is looking bullish as we go forward. They are net short. In fact, they are net short most of the time, to tell you honestly. It's a matter of degree. When they become, I guess their outlook is the most bullish is when they're neutral. In other words, they have a zero short position, and I'm not talking about a long position. Like I say, it's very rare actually that you see a long position at all in the commercial hedgers. They're there basically, if you think, for example, of a mining company that has substantial silver production, you always want to protect against the risk that the price will fall. So the investment banks that they deal with, or unless they do it themselves, these mining companies, will be to protect against a drop in the price. The most bullish position traditionally that you see in the commercial hedgers for silver is that they're neutral, and the most bearish is when they are fully net short. And that goes up to about, I'm going to say, 75 to 100,000 contracts. Recently, they were at about 80 or 82,000 contracts. Now they've come back down to about 60 or so thousand contracts. So that's a considerable drop. And like I say, it's in the right direction. So, that kind of gives you some perspective of how the commercials use silver futures. The best way I can put it is that they've gone from feeling like silver is quite likely to drop to silver has moved away from that and has less probability of dropping from these levels. There is, I think, since they're relatively high net short positions, they probably do feel there is there's a little bit of downside risk, but because it has started to move away, I think that they're showing their relative bullishness in terms of the silver price. My target going back to earlier this year was that we would see $35 somewhere at least by Q4. We have seen that now. We've dialed back. So that first target was reached. Honestly, I think that by Q1, we could probably see $35 revisited again. Between sort of now and mid to late March is a bullish season for precious metals. So I think that's a good time to expect that kind of, return back to the $35 level. I think it's going to be more easily maintained because this time it touched 35 and pretty much reversed after that. I think there's an easier chance it's going to maintain those levels. And then what I'm willing to say beyond that for, let's say, the rest of next year is that at some point, in the second, third, or fourth quarters, that we're going to probably breach the $40 level. And, we could get into the sort of low 40s. I think that odds are good that we're going to average somewhere in the high 30s to 40-ish for next year. There actually is some interesting data recently. So the one that most people follow is the Silver Institute. And earlier this year, they were predicting that we'd have a shortage of a deficit of about 215 million ounces. And now, interestingly, they've revised that down a little bit. They think it'll be closer to about 180 million ounces. Either way, we're somewhere around 20% of silver supply. So just to kind of refresh your viewers on this, the silver market is about 1 billion ounces a year supply. About 85% of that comes from mining, and the other 15% roughly comes from recycling. But demand is about 1.2 billion ounces. So we're really consuming 20% more silver than we're producing every year. And so, earlier this year, I started to dig into this to figure out how come the silver price isn't just absolutely rocketing in this kind of environment. And what I saw was that you've got inventories in the large silver exchanges, futures exchanges like the COMEX, the LBMA, the Shanghai, and the silver ETFs as well, the silver-backed ETFs. You've got a lot of silver there. But those inventories have been dropping dramatically since early 2021. So I think that a lot of the deficit has been filled by tapping into these above ground secondary supplies. I think the game is really getting really tight in that aspect. There's no doubt some I guess you could call it undocumented secondary supplies. In other words, hoards that are held privately, whatever, larger hoards, even small amounts. People are slowly sort of starting to sell it back into the market at these higher prices. But I think that's quite limited. I think these kind of difficult to measure supplies of silver, secondary supplies, are pretty tightly held and are going to want to see considerably higher prices to eventually come in to help meet the deficit. The Silver Institute themselves have said that they expect these deficits to go on for multiple years going forward. They think we're going to actually see new record deficit levels in the next 5 years. So the picture really remains very bullish. They did revise their deficit recently for 2024 down a little bit from, like I say, about 215 to about 180 million ounces. Part of that is they think that the jewelry and silverware demand will come off a little bit. They also think that mine supply will go up a little bit. I'm not quite as bullish. I guess we'll have to see probably by, I think, next April or so when they publish their final numbers for 2024. But I think that that's a little too conservative, frankly. I think that, one of the biggest drivers is industrial. Now, if you compare what it represents percentage-wise to total supply, if you ignore these secondary supplies, industrial is now 70% of the entire supply of silver. So 700 million ounces versus 1 billion ounces. That's pretty substantial. A lot of that, is in applications where the silver is not replaceable. The biggest and best example is solar panels. And solar panels, although, you've got some saying, well, if we get an economic slowdown, China certainly is struggling economically. They had a big stimulus package. They're now looking like they're going to be doing even more stimulus. They have a lot of overcapacity in solar panel production, which means that there's not going to be any limit to supplying solar panels. And what I think is important is that even if there were, let's say, a slowdown, so some growth, but not the same growth as forecast in solar panel production, what's interesting is that there's a technological shift in this market. And so we're moving away from this older technology called PERC, which is an acronym, and we're moving towards much more of solar panel production being with this newer technology called TOPCon. And TOPCon uses up to 50% more silver per panel. So even if you get a slowing in the growth of solar panel production, you're still switching to a new technology that itself just requires more silver for each panel. So overall, I think that industrial demand will stay very strong. And like I say, you've got, if you've got a recession, if you've got economic slowdowns, you have government stepping in and kicking in the stimulus. So I would expect that this is going to hold up really quite well. It's supply inelastic to price. In other words, if the price goes up, the supply basically does not react. About 75% of silver supply comes from mining other metals. So just to kind of explain quickly, the 3/4 of silver supply, mined silver supply, comes from mining gold, copper, lead, and zinc. The miners of these other metals who mine silver as a byproduct, to be honest, don't care that much about the silver. The silver is sort of a nice bonus for them. It's not valued all that highly. And frankly, they're happy to take whatever price they can get for the silver. But if the silver price were to go from $30 to $60, odds are they would do nothing differently. They would accept the $60 price because it's a relatively small portion of their revenue stream. Even at $60, they wouldn't go out of their way. And it's not that easy to expand a mine. It's not that easy to, get it permitted for higher capacity, all of these things. So they would probably keep churning out the same amount of silver. And as I say, accept happily this higher price for the silver, and it would just, boost their bottom line. So that's why I say its supply is inelastic to a higher price. The supply will probably not move much, even on a considerably higher silver price. And that becomes a bit of a vicious circle, right? Because the price goes up because the market starts to realize, hey, there's not going to be more silver coming to market, even if the price is higher. So, and to your earlier point, you're right. A lot of applications for silver require very small amounts. So if you think about an electric vehicle, for example, or a tablet, a smartphone, a television, whatever it might be, sometimes it's a few grams of silver. We're talking about a few dollars for each item. Obviously everyone wants to streamline and maximize profits, but if the price of a tablet, for example, goes up, the production cost, let's say, goes up by $3 or $5, it's unlikely they'll absorb it. But if they end up pushing, the retail price up by maybe even double that, it's not a huge increase on, a $300, $400, $500 item. And so, the higher silver price would not necessarily impact it all that much, but they absolutely need it. It's indispensable. So they'll go ahead